I'm still trying to get a bit acquainted with the software, the presentation software used by FXA. So please do be patient with me. So with that, today's presentation is Bitcoin and crude oil. Where to from here? What we will be doing is basically try to get a feel for where markets are going, at least these particular ones, following my multiple timeframes, multiple factor approach, which basically is a combination of technicals and fundamentals, and looking hence multiple factors, but also multiple timeframes, because I check 3 timeframes: monthly, weekly, daily. Monthly and weekly are my setups using macro, and daily is technicals using the various tools just to get my entries. With this, I design strategies that are either very short term, meaning 1 to 5 bars, or basically 1 week. Some call it swing trading, or position trading, which may be 2 to 3 weeks. And also I can also design from strategies that are a bit more long term than that, but these are usually not done with futures, but with ETFs. So for now, let's go to the Bitcoin and crude oil. First of all, there will be some attendance bonuses for those that manage to stay awake up until the end of the presentation. And the first bonus will be a paper I wrote in 2022 called M.T.M.F, Volatility Normalized Momentum. That paper which was presented a way to hugely improve the MACD indicator. And I wrote a paper. That paper was awarded twice by the National Association of Active Investment Managers, the Founders Award, and the Chartered Market Technicians Association, the Charles Dow Award. So as a present, I'll be sending, of course, the details of this paper. Also the MACD also indicators, which is already in stockcharts.com. And I'm very glad to say that the technical analysis community has embraced this indicator, this new work. And services will be very in TradingView, Metastock, MT4 Optima, and other platforms as well. So feel free to email you the details of that. And also we'll be doing some advanced momentum model webinars. So if you want to be getting all these gifts, send me an email, alex@alexspiroglou.com. And without any further delay, let's proceed to the presentation. Of course, we have to go through the risk warning that there is a particularly high degree of risk involved in trading in general, and especially if one is doing leveraged investments such as futures and options. And some people may portray, through their presentations that profits are guaranteed through trading. This is not one of these presentations, so I will be making a guarantee to you, and that guarantee is that you will have losses in trading. So, Bitcoin and crude oil, where to from here? First of all, let's start with Bitcoin, then we'll be going to crude oil. This is the multiple time frame, multiple factor approach, which I use to analyze markets. The bottom row is the factors I look at the monthly and weekly chart. The second row is the technicals, the factors I look on a technical basis, and then I go into the semi-systematic way to create a trading system or a trading methodology, the 4S framework, which is setups, basically the reasons want to be bullish or bearish, the signals, size, and stops. This is semi-systematic in the sense that setups and stops are semi-systematic. I have basically rules-based discretion. Signals and stops are fully systematic. So, which means that once I have a setup, i.e. the reasons to enter the market, whether from a fundamental or technical point of view, then the signal becomes completely mechanical. Okay, let's apply this to Bitcoin. First of all, let's look at again, the commitment of traders report. This is the factor we'll be looking at. It's right at the bottom, highlighted in red. Commitment of traders report, basically just a very, very, very brief description of what it is. Basically, it's the each week the CFTC, the regulatory authorities for futures and options in the US, gives out a report of which analyzes the open interest, basically how many positions are held overnight by the largest players in the market. Basically, there are three categories: small traders, and then you have large traders, and then large traders are subcategorized in two, which is the large specs, basically hedge funds or CTAs, or basically any kind of large player who has enters the market for speculation purposes, and also commercial traders, which basically is again large traders, but enter the markets for business purposes. For example, any company that doesn't speculate, for example, in energy, but is a producer or a consumer, sort of like a mining an oil mining company, a drilling company, or exploration company, or an airliner, which basically is a consumer of energy. So with that in mind, here this is Bitcoin. This is we've got the commercials, and what I've got here, the arrows are the COT signal system I use. Again, this is, if you notice, this is the weekly chart, and it's pretty accurate in the sense of providing me with signals. Although I must admit, this is not signals in the sense of like get in and get out. Again, this is the weekly chart, but these are more like alerts. So what I use is I take these alerts, those / signals, and then I take them into the daily chart to physically get into the market. So these are more like alerts, like a setup tool. So for now, for Bitcoin, commitment of traders report is bullish. It's been for 5-6 weeks now. We haven't had a sell signal. It's pretty close to having a sell signal, but for now, strictly speaking, it's still bullish. So let's go on to the next factor, which is sentiment. I think it's quite important, sentiment, because it's hugely correlated to liquidity. If the market is participants are rampantly bullish from a sentiment point of view, that basically means that they are fully invested. And if they're fully invested, then there is only one way for markets to go down. There are several indicators one can use for sentiment analysis. I'll be just obviously showing one because I'm more interested, to show you my methodology, how I combine technicals and fundamentals, and then see the charts themselves. So sentiment, let's see how it looks like for Bitcoin. Again, we're on the weekly chart. The indicator below is sentiment, and usually when sentiment is high, then markets are about to reverse. So when sentiment is high, again, we saw that last July in 2023, market was highlighted in red. Then we saw that again year end. The market went sideways, and again at the beginning went sideways, and sentiment is again a bit high for Bitcoin futures, and of course, I mean, you can see that, for example, in social media as well. Bitcoin is getting a lot of publicity. The arrows we have on the chart again, and these are the from the COT signal system. So this is a bearish factor. And the next factor I'll be looking at is seasonality. So, so before going to seasonality, let me stay a bit on this chart a bit and say that these factors are setup tools. These are not signals. So if I have a factor that is bearish, I note it down. Obviously, I don't want to be relying on just one factor, so that's why I look at several. And from each factor, I might have 2 or 3 indicators, again, on a very rules-based approach. But the point I'm trying to make is that we should be trying to see the market from a 360 angle, from as many angles as as possible, and so we can get a gauge. And of course, fully knowing that not everything will be lining up. All the stars will be lining up. It most likely will be a weight of the evidence approach, meaning some will be bullish, some will be bearish, some will be neutral, and we'll be taking a weight of these to see if we want to be bullish or bearish or or neutral. So this factor is bearish. Again, let's look at seasonals now, which is now we've switched to the daily chart, although sometimes I look at the seasonals on a weekly chart. Now, top panel is Bitcoin. The bottom panel is the seasonal indicator I have. This can be, seasonality can be studied in various time frames because it does change, because sometimes fundamentals change. And you can see it, for example, short-term seasonals like a 5-year time frame. You can see it on a 10-year, 15, or 30-year. Each time frame has its pros and cons because sometimes if fundamentals change, that change obviously will first show up on the 5-year seasonal. So it will be a bit more current. But then again, it might be also be a bit more skewed because if there have been some kind of a move in the past few years, which is not representative in general of the seasonals, it won't be, the data will be distorted. So that's right, to try to find the balance between these two. And this is my 15-year seasonal. Also check what happens on other seasonals. So the seasonal indicator at the bottom, as you can see, from January up until February, seasonals were bearish, and by and large the Bitcoin did follow the seasonal pattern. Then from February up until the for the 16th, seasonals were bullish, and then Bitcoin followed that script. Then from the 16th up until the 26th of February, seasonals were bearish, and Bitcoin did a bit of a pause, so it was following the script. From the 26th of February up until the 13th of March, seasonality was bearish. But well, strictly speaking, the beginning of March, but Bitcoin had a huge rally, a counter-seasonal rally. Now, going forward, and it should have topped at the 13th of bottom, the 13th of March actually topped. It did the reverse of seasonal pattern. But for now, going forward, seasonals seem to be quite bullish. So this is a bullish factor for Bitcoin. Let's now, once I've got an understanding what happens on the monthly and weekly chart. I haven't looked at the monthly chart because that's the business cycle, and that's not relevant, pertinent to Bitcoin. But at least I haven't managed to pigeonhole it somewhere in the business cycle, although it is a risk-on asset, highly correlated to the Nasdaq. So then I would proceed to the trend roadmap. This is the trend, obviously, is very bullish, both on the daily and the weekly charts. Now, I have an 8-stage framework that I analyze trends. But I'm trying to get these indicators programmed in very shortly. We'll have it programmed in TradingView. So I have skipped this step. Although strictly speaking, you can do it very easily. You can just plot a moving average and see that the trend is up. We don't need it's a very clear situation here from a trend point of view. So next factor I'll be looking at is momentum, and there's a trend, for example, is direction, and momentum is speed. So this is the chart of Bitcoin futures, and right at the bottom we've got the indicator I've talked about, the one I was twice awarded for the MACD. And what the MACD currently is at the risk level. Risk level is basically when the MACD is above 150, and it represents a risk to the current trend, what we would call overbought. But I try not to use this because sometimes overbought doesn't mean that the market will go down. It might go sideways. That's why I call it a risk, because so we're looking for a change in trend, basically, not necessarily a reversal. A reversal can come, but it can also be a change in trend, for example, like a pause. So, for example, the last time it was the 10th of November when the MACD topped, so it gave us a pause. Then on the 7th of December, we had a very big divergence up until the top in the middle of January when Bitcoin had that correction, but that wasn't enough to change the trend, and then we had the huge upswing. So for now, the MACD is bearish, momentum is bearish because it's coming off of a high level, and also just also notice that we had a very interesting pattern, something that I haven't presented in the worded paper, something I'll be putting in the premium version of this indicator. Look at that from the 7th of December up until the divergence we had. There was a little pattern there which is quite effective, and that's called a naked high pattern, where basically the market is making new highs, but the market is not just diverging, but it's also below its signal line. So that's a bearish factor for Bitcoin, at least for now. Now let's look at from a short-term point of view, because the MACD is I've kept the settings as the default ones, created by Gerald Appel, so which is like an intermediate term indicator, the 1226 setting. But this is the histogram, which of course it's been normalized. That's one of the properties of the MACD. And whenever the histogram is above 40, it seems that the market again is become short-term overbought. And when it's below minus 40, it is oversold. And as you can see, the market was up until a couple of days when I prepared this chart was below 40, and it was prone to bounce, and actually did bounce. So from that, we'll go into volatility. That's a big factor as well. And volatility plays a huge role, both as a setup and also for position sizing and stops. I mean, you can use it in many, many ways. And as John Bollinger said, volatility is basically high volatility. We look for high volatility because high volatility. So we look for extremely low volatility because that's when trends are born, and high volatility because then trends are where they go to die. So let's having heard that, I try to flesh out that principle, and I created this indicator below, which is the volatility valuation indicator. And what it does is it tries to find where volatility is extremely high or extremely low, and isolated places where the volatility was very high and when it was very low. Where low, obviously, it usually goes with trading ranges, where and as the principle holds that when you have low volatility, that's where trends are born. You'll usually get the market rally. So for now, its volatility is very high, which is another bearish factor. Basically, we're looking for a pause. And then relative ranker. So a relative ranker is basically a tool that for us takes us all the markets that I'm watching, and you can do that for your own custom markets. And rank them from stronger to weakest. And obviously, because, as a matter of principle, all things being equal, we want to be going long the strongest and short the weakest. Of course, there needs to have some caution around that, because at the tails there could be mean reversion. But as a general principle, we want to be going long the strongest and short the weakest. So out of the 79 markets I'm following, futures markets primarily, Bitcoin is the second strongest right after Coco. Again, my methodology can be applied to your asset class if you're doing FX or if you're doing stocks. It really doesn't matter. So Bitcoin is quite strong, really huge strong. So if someone wants to be taking an attempt to short Bitcoin, they must be really careful on that one. So setups, let's take an evaluation. So this is what I do. This is my methodology. Basically, I take a rules-based approach, all the indicators, which I've classified with frameworks. Each of these, I haven't gone into the details because I want to be spending some time on crude oil as well. So basically, for each of these factors that I've looked up so far, I've got it categorized in stages or states, and the combination of this can be classified from a rules-based approach, whether bullish or bearish, and then I can have the balance of them into as a setup. So you can use it either for creation of a system, an automated system, or a chart checklist, which basically gives you a very disciplined approach to your chart analysis. So let's do the chart checklist for Bitcoin. The COT, as we saw, we're close to bearish, but strictly speaking, it's still bullish. So it's more of an orange than the red. So strictly speaking, it's still bullish. The sentiment is bearish, it's too high. Seasonals are bullish. The trend obviously is bullish both on the daily and the weekly chart. Momentum is long-term bearish, as we saw, short-term bullish. Long-term bearish because it's on the, as we saw, it's on the above the risk range. Volatility is also bearish, very high. And from a relative ranker point of view, the market is really strong. So for this point, if I was to, I would prefer to be staying out, so my positions would be flat. On a short-term basis, I would try to be taking long positions, but from a going forward, I will be very careful now. As far as I'll be wary on Bitcoin. It will be just my bullish positions will be very short term, very short term. So I would rather be flat with a slight. At this point, I would rather be more cautious. So signal. So what happens if we wanted to have signal? This is my signal generation. I have so once I've got a setup, let me go to the previous slide. So once I've got a setup, which is a rules-based discretionary approach. So for example, if I was bullish of this market, which I will be on that, or when we analyze when we go to the next market. So if I was bullish on Bitcoin, what I would be doing right now is actually depending on the signal generation system I have to be going either long or short dive. So for example, if I had a bullish bias, what I would be doing is I would be opening up the chart and follow the signals. And again, this is a very mechanical system for entering. The red dots above the bars are indicators that the market was oversold, and I've got two of these, and the market responded, at least for the second one. The red and green arrows are my bullish and bearish signals. I don't follow each and every one of them. I repeat, I do not follow each and every one of them. I just follow the ones that I am according to my setup. So this is quite mechanical. So if I have a bullish setup, I will completely ignore the bearish ones. And if I have a bearish setup, I will completely ignore the bullish ones. So I hope that makes sense of the signal generation mechanism. Okay, so let's look at the next market following the same methodology. Again, very rules-based approach, crude oil. First of all, look at crude oil from commitment of traders report. Top chart is the crude oil, and the bottom one is the commercial, the net positions. The arrows I've got, as I mentioned again, it is the COT signal system. These are more like, as I mentioned, more like alerts. So once I've got an alert on the weekly chart, then I go to the daily chart to start looking for actual buy signals. So for now, the last signal I had on crude oil is a buy signal. So the market responded to that, and it's been bullish for 1, 2, 3, 4, 5, 6, 7 weeks, going to the 8th now. So for a couple of months, as we can see, since that last signal we've got, the market is bullish, and we haven't seen an extreme or a signal to the opposite. So the weight of the evidence from a commitment of trader point of view points to upwards, for it has a bullish bias. Then again, looking at market sentiment, again, this is market sentiment. I've noted the areas, highlighted the areas when the indicators, the sentiment indicator was too bullish, which is actually bearish. Was, you know, there was too much speculation, too much optimism, or too much pessimism. So at the bottom, whenever there was too much pessimism, the market had a low. When there was too much optimism, it had a high. So right now it's neutral. There is no extreme in the data. So let's look at seasonals. This is very, very interesting. Now, going from the 20, so again, top chart is crude oil, bottom chart is the seasonal indicator I've got. So going from the 28th of March up until the 7th of June, you have a very, very strongly bullish period for crude oil. So this is a seasonally sweet spot. It's an area where crude oil usually rallies. And so this is definitely, most definitely a bullish factor. Trend roadmap, again, as I mentioned, I will be presenting it next time. So for now, what I've got is two moving averages, the 50 and the 200. You can get a very good understanding of the trend through that. Well, so whenever the 50 is above the 200, you can classify the market as bullish, or you can use just the 200. My preference is to use both and say classify when the 50 is above the 200 rather than just have the 200. But either should be fine. I mean, there are pros and cons to both methodologies. So according to this, the market is just turned bullish. So the trend has changed from bearish to bullish. So let's look at momentum now that the trend is, it's just begun reverse to the upside. This is the weekly chart for, I wanted to have a multiple time frame view of momentum. So this is the weekly chart for crude oil. Again, the buy sell signals are from the COT system. And using the MACD, not only we can see the level of trend, but also the lack of it. This is a very interesting application created with the indicator. Now, please notice that the MACD went below 50, the rally range, and on the 23rd of October. And it is currently between 50 and minus 50 since then. Now, what I've done is I created a technique called the trying to find when the market is in a trading range, which is when it's basically it's a ranging, and the definition, mathematical definition of such a condition is when the MACD is between 50 and minus 50 or more than 20 bars. So if it's during that, again, you can see that the indicator went below 50 at the 23rd of October. And since the 11th of the 11th month, that was when the condition was qualified. It was officially in a trading range on a weekly basis. So as you can see, it hasn't gone much since then. It's been going through basically around $84 per barrel. It went all the way to 70. So yes, there has been some up and down, but on the balance of it, the indicator pretty much described what's on the chart on a very mathematical way. So the weekly momentum is on the 7th of the 7 range of the MACD, which is the ranging range. So let's turn on the daily chart. Again, I did the same exercise on the daily chart, and the MACD entered the -50 range on the 21st of October, sorry, 21st of December 2023, and counting forward 20 bars from there, that gives us the Monday of 22nd of January. So the qualification of the criteria happened then. So going forward from the 22nd of January up until then, all of it is real-time definition of a trading range. So as you can see, the market had a sideways to up definition, creeping up, but it wasn't something that was really, really tradable. But as of the 18th of March, when the indicator went above the rally range, the 50, when it started breaking out, now that is also good news from a directional point of view, because since about a week ago, the market broke to the upside, and it seems to be having some upside momentum. So volatility valuation, let's look at the volatility valuation indicator as presented on Bitcoin. Now, whenever we have low volatility valuation, we'll have the beginning, the start of the trend. Again, so previous times it coincided with the top, December, January 23, March 23, April 23, October 23. So basically it reversed the it started creating trends from there. Very high volatility of October 23, and now we have, again, we're very, very low volatility, so we should be expecting going forward some kind of expansion of volatility. So relative ranker, let's see where it stands. Again, I have all the tables, so obviously Bitcoin was the second strongest market, and crude oil is somewhere in the middle, with marginally positive from a relative ranking point of view. And of course, we kind of like guessed that through the weekly chart of when we saw the momentum of the weekly chart, we knew that the MACD was ranging. So the setups, let's look at the chart checklist. So the COT data are bullish. Sentiment is neutral, which is, it's good. It's not an extreme. Seasonals are bullish. The trend recently turned bullish. Momentum is also bullish on the daily chart. I mean, it's on the rally range. On the weekly, it's still ranging, but on the daily chart, is still it's just gone very positive. Volatility is very low, which is bullish, which means now we should start seeing the creation of a new trend. And relative ranker, of course, it's low. So by and large, I'm quite bullish on crude oil, and I will be looking for buy signals. Again, the setups, as we mentioned, is semi-systematic. The signals and the stops are fully systematic. So what I would do from this point on, I would turn on my signal system to see where I would get in a buy signal. So going forward, I will be taking buy signals when they do show up and they're getting qualified by price action. So far, I haven't had any qualified signal, because what I do is whenever I have a green bar, and of course I'm bullish, I'm not taking the signal on that bar, because that is based on the calculation of the close, but on the break of the the next bar. So the last buy signal I had a couple of bars ago did not get fulfilled on the next day by taking that bar's high. So I'm still waiting for a buy signal on crude oil. And with that, I would like to thank you for your attention. And again, feel free to contact me for the attendance bonuses for those that managed to stay awake during this presentation. the awarded paper, the MACD indicators, and the momentum model. And if there are any questions, I'll be happy to take them. Obviously, I cannot provide investment advice to anyone. This is for educational purposes. And with that, I would like to thank you very much. This is the way for me to analyze the markets. Obviously, I do this every week, and I just showed you what I do with at a very high level with Bitcoin and crude oil. I do this for across all futures markets, and I get signals about usually 2 to 3 per week. So if you're interested in seeing this in a bit more detail, send me an email and we can arrange that, you know, with more specific setups, specific entries, exits, and so forth. And with that, I would like to thank you all very much. And thank you. God bless.